Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, April 26th, not 25th, 5:27 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. And coming this Sunday, Ted and Connor will kick off the inaugural Revere Roundup weekend walkthrough. So we'll get that posted late Sunday afternoon, early Sunday evening. And one of the segments is going to be a walkthrough AI tech hardware data center, this theme that we've been talking about. Almost 2 dozen names in there. We'll take a look at the charts, and they will take a look at the charts. I'll touch on a few during this video, but be sure and check that out. So, state of the market in a mild correction, close to a follow through day today, but the volume fell just short. The price action was there, but volume has changed a lot over the years. And if you would have added the after hour volume into today's volume, with the reaction to Microsoft and Google earnings, we probably would have had a follow through day. So there are always shades of gray involved in the market. So check the trend gauge over here. Enough good action in leaders that we upgraded it from the red down bearish arrow to neutral with the green sub arrow. And we'll talk about that as we get through this video. Short term, the S&P 500 closed a hair above the 21-day moving average, and the 21-day moving average is just so subtly curling higher. So some good news there, but still on the red arrow with the yellow sub arrow headed toward neutral. NASDAQ 100 paused just below the 21-day moving average, actually peaked its head above, but a little fade in the last 30 minutes carried it back below. Medium term, still flashing the red arrow there as well, but some improvement as these indices are coming up into that key level. Long term, all five of the major indexes still above the 200-day moving average. And as I note constantly, the market never gets into serious trouble while the indexes are above the 200-day moving average. Certainly not close to a bear market as long as we're above the 200-day. There's times to be in leading stocks, and there's times to just relax a little bit and let the S&P 500 do its sector rotation and going back and forth from growth to value. Let things develop, let bases build. And for now, big picture, we held the 100-day / 20-week moving average on the S&P 500, bounced nicely off of there, and had some positive catalysts late in the week to give some hope to a market that was teetering on the edge after a big move down just a week ago. So what happened today? After hours, Microsoft and Google, great reaction to their earnings, especially Google. Microsoft faded a little bit during the day, but it's not as much the price action with that, and also with Meta as to some of the things that they said in their conference call, and that's their talk about, remember, Microsoft and Google are big web hosting, have huge web hosting businesses, and Amazon does as well with its AWS. And Meta, although it took a hit on earnings, talked about how they're going to do a lot of capital expenditures for AE, and that's right up the alley of Microsoft and Google. Positive reaction to their earnings. Google more so, very clearly, but Amazon jumped as well because of some of the things that Microsoft and Google were saying. And again, it goes into this AI tech revolution that's going on in the picks and shovels companies that are building out the infrastructure for that. Additionally, before the open, PCE inflation data came out, and it was in line to moderately a wee bit hotter, but nothing that would derail the gap up, although the algos did take out the pre-market high and the pre-market low, as they're prone to do, before we settled in, opened up about 0.7% on the S&P, and the NASDAQ 100 put in the low within that first 30 minutes. and trended higher throughout the day with a minor fade into the close. Here are the final numbers. 21 over 21. This was the initial 21 that we entered the week uh, with, up 0.7%. Positive on the week in line with the indexes. So leading stocks doing their job. If you add in the 7 names that we've added to this, so 28 names in total, up an average of 1.44%. And again, this is indicative of what leading stocks are doing. That's why we reinstated this and monitor it closely. You can see the up down numbers: 11 up, 2 unchanged, 8 down. That's not overly impressive. But some of the numbers, the individual numbers, and especially the new names that we added this week, which included us taking positions in them. We only add them if we take a position in them. That 1.44% number, pretty good. Big Seven up 3.01%, obviously skewed by Google being up over 10%. The RG8, this is our 8 growth ETF composite, up 0.8%. S&P 500 up as high as nearly 1.3% before fading, but still closing up by 1%. However, breadth not quite there. If you look at the equal weight RSP, S&P 500 just barely positive. NASDAQ 100 up 1.54. Again, this is the Big Seven that's pumping this up. Equal weight, less than a third of that, but still up by 0.5%. Dow up 0.4, mid caps up 0.3, Russell 2000 small caps up 1.05. Global 60/40 up 0.67. In-house GROTECTION up. Our flagship portfolio is what this is. GROTECTION up approximately 0.72%. A few up higher as we took the hedge off in taxable accounts for NVIDIA and added NVIDIA back for non-taxable accounts, as that's clearly one of the beneficiaries of this AI tech data center uh, revolution that's going on here. So we'll show that chart when we get back into things. And let's kick it off with a high level overview here of what we do at Revere. We don't always do a good job of initiating or communicating exactly what we do. We're not a fund. We're not a hedge fund. We're not a mutual fund. We're not a private fund. We're a fee-based only, fully transparent, conflict free fiduciary SEC registered investment advisor. So we manage, everybody has an individual account that they can access at any time. Assets are custodied by Charles Schwab. Here's our flagship portfolio. It's named GROTECTION. It's designed with a dual mandate to grow assets during uptrends, protect assets during downtrends. So we're active risk managers, and we've got a set of trend following rules based on 3 time frames and the action of leading stocks, which we show every night in the trend gauge. That dictates how much exposure we have to the market. We do trades, they're called block trades. So if we want to buy, like for example, today, 3% for NVIDIA for everybody, we calculate what everybody needs 3%, and then everybody gets the same price, including Dan and I and all of our friends and family funds. Everybody gets the same price, no cherry picking when it's executed. So, and we've got all our money in this. We put our money where our mouth is. All of our money is in this strategy, GROTECTION. So in an ideal uptrending market, we'll be fully invested. We started the week less than 0.3 and doubled our exposure as the week progressed. And if we get to be trending above all 3 moving averages and growth leaders acting well, we'll be fully invested. If you've been watching us, you saw where we went to a neutral or short-term downtrending market, we reduce exposure. Worst case scenario, we break below the 200-day moving average. That's where we get to a maximum defensive posture. That's where we're at risk for bear markets. All severe bear markets take place below that level. So we're risk managers here at Revere. If you minimize the drawdowns, the gains take care of themselves when the market is healthy. And when it returns to health, we use short-term indicators to get back into the market, which is kind of what we did this week, as we held some support and then dipped a few toes in the water with potential leaders, and see how that plays out next week. So here's excuse me, the S&P 500, and these last 2 candles are really key because we gapped down Thursday morning and rallied nicely off of that. and strong close, followed it up with a gap up this morning, making higher highs for the week before a little bit of a fade into the close. So we ran right up into this flattening now green line, 21-day moving average, still below the 50-day moving average. And this is a key level, and it's a natural spot for us to pause after this big breakdown candle on 415, and then the culminating in the low put in a week ago on 419. So if you look at a 60-minute chart of the S&P 500 and you draw a line, you can see very clearly this 5100 level acted. It's really 5090 to 5110, really about a 20-point level. It acted as support back in early March. Then we rallied, acted as support during the pullback in early April. Then we broke below it, rallied up to it, and then the gap down and rally up the last 2 days. So this is a pretty important level. So it's natural to pause here around this 5100 level, not to mention that we've got the 50-day moving average and the 21-day moving average right around there. So wouldn't be a surprise to just go sideways for a little bit, rest after bouncing very hard off that 5,000 level. So we're up 2% in 2 days, and then make a stab at getting firmly above these moving averages. And then we want to see the 21 curl up and retake the 50-day moving average to get all of the moving averages aligned in a row. So there's the S&P 500. NASDAQ 100, very similar, rally off the low right into this declining 21-day moving average. I know there's some people that are saying arguably this is a spot to put in a short. And if we break down from here, that is true. Can't argue with that. That's technical analysis 101. You're back at the top of the range into a resistance area. Bulls want to see us break through there. Bulls want to see it break down from this level. We'll see what the market has for us next week. We don't predict here. We go with what the action is. But the last 2 days' action certainly on the bullish side, and we'd like to see a follow through on that to the upside. The Dow back above the 80 MA and that's 38,000 level, but has not been able to substantially clear the downtrending green line. That's the 21-day moving average. Mid-cap index, the S&P 400, right into the declining 21-day moving average, and the Russell 2000 index, again, into the declining 21-day moving average. So we're seeing that as resistance for the short term across the board. We've rallied up into it. Bulls want to see that overcome next week very clearly. VIX lower again today, below that 16 level, actually right on the 15 level, and the 200-day moving average and the 50-day moving average. So the big excessive bearishness with this big spike that we had has been wrung out of the market this week. Let's go to the dollar. Dollar strong today, bouncing off the 21-day moving average. In fact, an outside positive reversal that didn't seem to stop stocks, although it's normally a headwind. How did that impact precious metals? GLD up a tad, holding above that 21-day moving average. Silver down, sitting right on the 21-day moving average. And GDX, this is gold and silver stocks, up 0.73, closing in the bottom half of the range after a nice bounce yesterday off the 21-day moving average. Bitcoin, bit on the weak side today, inside day, below the declining 21. No, that's BITO. I did it again. IBIT. Old habits die hard. Still below the 50-day moving average and the declining 21-day moving average as it kind of consolidates near the bottom of this range. On to bonds, BND, Broad Bond Index. Bonds closed at the lows of the day. The BND did anyway, but prices higher, meaning yields lower. So when that PCE report came out, the reaction was for yields to move down a bit and the chance of a rate cut to pick up ever so slightly. But we'll take what we can get on that realm. TLT up on the day, closed at the bottom of the range, up 0.5%. TYX, the 30-year long bond yield down 0.81%, and TNX, the 10-year down 0.8%. So that break, not adding on to the strength of that yield breakout that we saw yesterday. That's our inter-asset correlation charts. Let's get to the tail of the tape. We can pause this. Do want to point out AAII, the excessive optimism has been wrung out of the market. So over the last 3 weeks, the bullish percentage has dropped from near 50 down to 32, and in fact, it's below the number of bears. They're really evenly split here. And the NAAIM, this is active investment managers. This dropped from over 100, which is usually the sign of a top, and it was this time too, all the way down to the 60 level. So we've reset the excessive optimism there, which is very clearly a contrary good signal if you're a bull. Let's see what else here. Day count up 4 out of 5 days into that resistance level. First day back above the ADMA, basically right on the 21-day moving average for the S&P 500. Sectors, not a lot of standouts today. Semiconductors, solar, and retail on the downside. Oils, regional banks, financials, staples, and utilities. Growth led today on the back of that Microsoft, Google news after hours last night, and transports faded as well. 2 changes to the portfolio: added NVIDIA back and took off the hedge for taxable accounts, and Hood added a starter position in that. So kicking up our exposure, we've taken in 7 individual small positions this week, nothing more than half size, kicking up our exposure from 0.61 to 0.72. So the bottom line on the day, Microsoft, Google, and PCE spark a tech AI rally. Leaders outperform. S&P and NASDAQ 100 basically right at their 21-day moving average. So let's take a look at a few names. We'll go through. Let's just go through the 21 over 21 first. Yeah, this stock is this included. I want to show A-Lab. This is an emerging data center leader. It wasn't in the 21-21 list, but big volume up today, breaking through all of this resistance that created over the last 3 weeks. Right near a closing all-time high. You see this big reversal. So this is forming an IPO base, and this is one of the data center infrastructure names that we've got our focus on. So what I'm going to show here is we'll number it by order, and we'll go through first the 21 over 21, and I want to bring up the weekly charts as well. Since it's Friday, we want to get a feel of how what the weekly chart looks like on these names, and we'll put this in the upper right-hand corner so we can get a dual view of what's going on here. So we'll start off with, as I said, the 21-21 list, which was we went into on Monday. So Raytheon basically sideways for the week. They did report earnings, and it didn't go any higher on that. Didn't really go any lower either. So what we'll do with this list, as I said, it's expanded throughout the week from 21 to 28 names, is we'll curate it over the weekend and just have a fresh 21 to start the week with, and we'll review that in Monday's video. Next up, Charles Schwab, mild trend higher this week, up 2% for the week. First Solar, and this is another indicative sign. You're going to see a pretty consistent theme. I believe 18 or 17 or 18 of the 21 were up for the week. So were the indexes, but these at least held their own, and this had a defensive bent, as most of the tech names broke down late last week. There weren't very many in this list at all. So First Solar, up 2% on the week, just hanging out, not really making any progress, but this is one that we added to the portfolio this week. CCJ, uranium stock, hanging out right around the 21, up 2.6% for the week. FCX, up 1.8% for the week, undercutting but reclaiming the 21 during the week. Kupang reversed from an all-time high, still up 4.1% on the week. TBT, the interest rate play, you can see this. This is kind of a contrarian play in here, as it's a bet on higher interest rates. You can see we broke out of the cup and handle for interest rates and pulled back into the base. So if this is a false breakout for interest rates going higher, that will be a positive for stocks. So we'll be monitoring that. SE, Internet retailer up 14% on the week. So uh, extreme strength being shown there. Goldman Sachs up 5.8% on the week. Reported earnings last week, following through to the upside with some nice relative strength this week. Google, there's the big gap up 11.6% on the week after undercutting and reclaiming the 21 on that initial Meta weakness, Meta earnings report reaction on Thursday. That's kind of what kicked off this 2-day rally in tech. UAL consolidating this week up 2.8%. American Express consolidating the last 2 days, also still up 2% on the week. GPC, Genuine Auto Parts. Now, if growth starts to work, this really will have no place in the portfolio, down 1.5% on the week. Avalon Bay, this is a REIT, housing shortage in the US, and they're in apartment housing. So they're in the right area, certainly. Up 4% on the week, despite the failed breakout there that you can see through the pivot. AEM, gold stocks had a good week. This one up 2.6%. Negative reversal today, though. Generac showing strength up 3.7% on the week. RSG, this is pollution control services, up 1.1% on the week. There's another one that won't be in the portfolio as it's not really a big growth name. International flavors and fragrances up less than 1% on the week. Very defensive, obviously, and another one that'll get cut and probably replaced with something growthier that showed good relative strength this week. Texas Roadhouse up 4.5% on the week. Restaurants were featured in our podcast. Connor took a look at quite a few charts. I broke down the group and the relative strength line and how it indicated that this group might lead if the market righted itself. And sure enough, it has. We bought Kava this week, so that might replace TXRH in this list come Monday. XOM, initially negative reaction to earnings, closed under the 21 over 21, under the 21-day moving average, down 1.6% on the week. GE Vernova, this is alternative energy GE spinoff, up 13% on the week. Spotify, we added this to the portfolio. Okay, that's the end of the initial 21 over 21. So these last 7 are what we purchased during the week. So here's Spotify, bouncing off the 50-day moving average yesterday, closing back above the 21, up 5% on the week. Constellation, this is alternative energy, nuclear small reactors. They've got an agreement with Microsoft to power some of their data centers. These new AI data centers require an incredible amount of energy. So this is included in that list of data center hardware companies, up 4% on the week. VRT, bought this Wednesday and added some yesterday on earnings. Look at the volume there, right in the sweet spot of data center cooling technology, up 25% on the week. Looking to build a big position in this, given the opportunity. GDX up 1.5% on the week. Kava, I mentioned we added this. Great day today. Big break through that downtrend line on above average volume. Excellent stuff here. Up 16% on the week. NVIDIA, we added that back today, coming back up through. This is exactly what we want the indexes to do, what NVIDIA did today. Blast right up through that 50 and 21-day moving average on above average volume, in this case, just barely above average, but we'll take that with a big stock, up 15% on the week after a massive shakeout last Friday. And finally, Hood, reclaiming the 50 and 21-day moving average, up 7.52% on the week. And that's your actually 28 over 21 list. Well, one of them closed below the 21, and a few of them are going to get cut from a relative strength standpoint. But I think that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. If you're interested in becoming a client, my partner, Dan Stewart, dan@revereasset.com. Phone's 855-REAL-WEALTH. That's 855-732-5932. And with that, I'll wrap it up for the week ending Friday, April 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening. Make sure you tune in to Ted and Connor on Sunday, and I'll be back on Monday. Our podcast is already out on YouTube. You'll get the email Saturday if you're on the email list. And have a great weekend, everybody. Thanks.